On June 26th, General Mills reported fourth quarter and full year earnings for the period ending May 26th, 2019. This video provides an update on the company's dividend safety using its most recent operating results. To begin, let's talk about General Mills' business model. General Mills manufactures and distributes consumer packaged foods. The company's brands include Cheerios, Total, Yoplait, Haagen-Dazs, Betty Crocker, and Blue Buffalo. General Mills has a market capitalization of nearly $30 billion, with annual revenues approaching $17 billion. General Mills is one of the world's most popular dividend growth stocks. The company's current dividend yield is 3.9%. Moreover, General Mills is a consistent dividend grower. In fact, the company has increased its annual dividend payment for 15 consecutive years. Because of this, General Mills qualifies to be a member of the Dividend Achievers, an exclusive group of dividend stocks with more than 10 years of consecutive dividend increases. Looking ahead, investors interested in owning General Mills stock will likely be interested in the safety of the company's dividend payment. For the remainder of this video, we will discuss General Mills' dividend safety from four perspectives: its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, its dividend safety in the context of its recession performance, and its dividend safety in the context of its current debt load. First, let's discuss General Mills' dividend safety in the context of the company's current earnings. In the fourth quarter of fiscal 2019, General Mills generated adjusted earnings per share of 83 cents, which compared quite favorably to the 79 cents of adjusted earnings per share in the same period a year ago. For context, General Mills currently pays a quarterly dividend of 49 cents per share, which implies a payout ratio of 59% in the most recent quarter. Looking out over a longer time horizon, our conclusion is the same. General Mills generated $3.22 of adjusted earnings per share in fiscal 2019. The company distributed $1.96 of common share dividends during the same time period for a dividend payout ratio of 61%. Using earnings, General Mills' dividend appears very safe for the foreseeable future. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. With that in mind, we will now compare General Mills' current dividend payment to its free cash flow. General Mills generated $779 million of cash flow from operating activities in the fourth quarter of fiscal 2019 and spent $170 million on capital expenditures during the same time period for free cash flow of $609 million. The company distributed $298 million of common share dividends during the same time period for a free cash flow dividend payout ratio of 49%. Looking out over a longer time horizon, our conclusion is the same. General Mills generated $2.8 billion of cash flow from operating activities in fiscal 2019 and spent $540 million on capital expenditures for free cash flow of $2.26 billion. The company distributed $1.18 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 52%. Using free cash flow, our conclusion for General Mills' dividend safety is the same as when we used earnings. The company's dividend is currently well covered by free cash flow, and we see no risk of a dividend cut in the near future. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. With that in mind, this section will analyze General Mills' current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by assessing its earnings per share performance during the financial crisis that occurred between 2007 and 2009. General Mills' performance during this time period is shown here. General Mills produced a 25% overall increase in adjusted earnings per share during the last recession. The company continued to make new highs in adjusted earnings per share as well. More importantly, though, the company's earnings still covered its dividend payment, and General Mills continued its streak of dividend increases. Because of this, we have little concerns about the company's ability to pay rising dividends during future economic downturns. The last angle that we will use to assess General Mills' dividend safety is by looking at the company's current debt level. More specifically, we will see how much its weighted average interest rate would have to increase before its free cash flow would no longer cover its dividend payment. At the end of the fourth quarter of fiscal 2019, General Mills had $14.5 billion of total debt outstanding. The company generated $122 million in interest expense in the most recent quarter for a weighted average interest rate of 3.4%. The following image shows how changes to General Mills' weighted average interest rate would impact the company's dividend safety as measured by free cash flow. As you can see, General Mills' weighted average interest rate would need to rise to above the 11.9% level before its dividend would no longer be covered by free cash flow. Looking at over a longer time horizon, our conclusion is the same. For fiscal 2019, General Mills generated $522 million in interest expense for a weighted average interest rate of 3.6%. The following image shows how changes to General Mills' weighted average interest rate for the full fiscal year would impact the company's dividend safety as measured by free cash flow. As you can see, General Mills' weighted average interest rate would need to rise to above the 11% level before its dividend would no longer be covered by free cash flow. Because of this, we have little concerns about the impact of the company's debt on General Mills' dividend safety moving forward. Thank you for watching today's video, which performed a deep dive on General Mills' current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.